Stay with us, Sandeep. Let's also get in Manav Chopra and get in his top technical trading strategies. Manav, sorry for keeping you waiting. Run us through your top technical calls.
Yes, my first buy call is on Wipro. The stock, after a good sideways consolidation of at least 2.5 months, had witnessed a very good move today, which has been accompanied by above average volume since past 4 trading sessions. And most importantly, we have not seen any price correction in this, but only a time correction, which also explains about the momentum that the price would carry forward from here on. So a stop loss of 330 in Wipro for an upside target of 375. My second call would be a buy on AMARAJABAT batteries. Basically, the prices have breached its falling trend line drawn from its recent highs, and the momentum oscillators have also entered into a buy mode. Also, the prices have managed to close above its long-term averages. So in the near-term perspective, it's hinting for a medium-term trend reversal. Buy with a stop loss of 760 in AMARAJABAT batteries for an upside target of 840. And my last pick would be buy on KTKBANK. Basically, the prices have been forming a series of high tops and bottoms, and recently the prices have formed a new high on the intraday charts, accompanied by volume. So purely on the momentum basis, we expect this rally to continue on the upside. We recommend a buy into this with a stop loss of 119 for an upside target of 132.
All right, those are some of the top recommendations there coming in from Manav. Sandeep, moving right on then, let's dissect some of the other stocks that are active in trade today. In fact, just pull up the list of the Nifty 500 gainers and what is active in today's trading session, although the market by and large is looking rather weak. KRBL up and about in trade. Future Lifestyle is having a good run. There's HCC as well, 3.5% on that stock. Vakrangi, 8K Miles are some of the other outperformers, while CCL Products, Serra, Shriram City as well as JK Cement are active in trade. Sandeep, the general view that we're getting from market participants is that fundamentals within the cement space are looking strong. The demand-supply mismatch is getting bridged to a certain extent. How are you looking at prospects for the cement stocks, and any particular call on mid-cap cement?
The cement stocks overall are looking well placed. The only issue that's postponing this entire cement story is that the price hikes are not really coming through in a manner which they should, which could lead to the earning traction to justify the valuations of the stocks. So which should happen going forward, but right now it's not happening. So the stocks are in more of a range. So I think from the context of the cement pack, on the large cap side, obviously Ultratech is best placed with its capacities and underutilization of capacities and the potential of further cost savings in its acquired plants. And on the mid cap side, I think one can make their pick. I think cheapest is India Cement. It has some debt issues, but I think those could get addressed as the market cycle, as the cement cycle plays out. So I think at 85, 86, that's pretty decent, and it could give upwards of 20-30% kind of returns.
All right, on that note, let's take a quick break. Sandeep, thanks very much for taking time out and joining in with that take. 10,901 on the Nifty. Sensex continues to look awfully flat. As you can see, we're confined to a fairly tight range. Quick break right here on Closing Trades. Be back with more.
Hello and welcome back. Markets are absolutely flat at this point of time. Let's go back to our guest with us. Manav Chopra is with us, as well as Dr. C.K. Narayan and Manas Jaiswal. Manav, let me come to you first. When we talk about a lot of these names, there are two banking names that have done well. One of them is Axis, the other one is ICICI, and probably looking at the recent move from the lows, Yes Bank could also fit in over there. What is your call on these banking space? Where do you think the banking index is going?
See, at the current levels, we have seen a good amount of outperformance, at least from the banking index. We have seen, most of the private banks shown a good amount of outperformance, and specifically, when we're talking about Axis Bank, the stock has witnessed a good amount of an uptrend, and if you look at on the weekly and the monthly charts, it has seen a very good base building, and we expect a good upside from even from the current levels. In fact, it has very good support around the levels of 640, 645, and if you're looking at the chart pattern structure, it is clearly indicating a move towards the levels of 710, even 730 in the medium term perspective. Keeping that in play, I think one can still maintain a buy on dips approach on the banking index. 27,000 is an important support, and eventually we expect an upside move towards the levels of 28,000, primarily led by ICICI Bank and Axis Bank both.
Right, Dr. Narayan, any picks that you can talk about again?
Well, I would think Asian Paints is revving up right now, slightly above the day's average as it were, and challenging some near-term resistances. So it may take a little bit of work for the stock to continue higher, but once it does, say crossing something like 1405 thereabouts, I think the pace in the stock would pick up considerably. And anyway, it's in an ongoing uptrend. So achieving those levels should not be a difficulty for Asian Paints. So buy that with about a stop at around 1390, short-term price target at 1425. Second stock that I would recommend for a buy is Torrent Power. I think several of the power stocks have been kind of building up better looking price patterns on the charts. This is happening after a long period of time. Now these patterns are of certainly of a more accumulation nature, indicating that some longer term situation is building up, but Torrent Power being somewhere around 260-65 levels has that extra trading mojo attached to it. So that's a trading recommendation buy at the current level of 265. A stop loss can be maintained around 260, 262 and a price target at 270, 273.
Manas, your 255 trading call?
Torrent stock has been facing resistance near to 270, but now looking at the charts, I believe that the consolidation phase is over and the possibility is either in a day or two you can see an upside breakout. So here my target would be around 280, stop loss should be 262. Second is the sell on Glenmark, because Glenmark has broken its support of 645 today. Now stock is trading below its 100-day moving average, and looking at the charts, I believe that this time it can even test its 200-day moving average in the coming days. So target would be around 620 here. So take a short call here and keep your stop loss above 650.
Like 307 trading idea then. That's all our technical experts flagging off some of their top picks. The breadth continues to remain negative, and a big casualty today is Sun Pharma. Let's discuss that and lots more with Mayuresh Joshi as well, who joins in. Mayuresh, the stock is off nearly 5% from the low point of the trading day after the management said that they're not privy to any information regarding that whistleblower complaint. But do you think this is convincing enough for the street, which has punished the stock quite severely?
Afternoon, Aman. I think all news items surrounding the stock at this point of time, I think let it settle down, because really at this point of time reacting to some element of news piece which is not authenticated at this point of time does lead to further speculation. So I think restrain from commenting any further on this. I think let it settle down first. Let there be further clarity in terms of what is actually transpiring, and then we'll probably take a call on the stock.
Right, when you talk about the pharma pack, Mayuresh, probably one would say that this would be a year of pharma and IT when they started the year. What is your call now on the pharma when Sun Pharma is declining this way? Of course, this is not for US FDA reasons, this is not for reasons of pricing pressure, but other large cap pharma companies can be looked.
Afternoon, Pankaj. Again, I think the landscape for the sector as a whole has definitely improved over the past few quarters. The pain and hit that this sector took over the last couple of years was very evident, both in terms of FDA complaints, which were thick and fast, both in terms of import bans, import alerts, and that had a double whammy, because I think the approvals were probably not coming through for the affected plants, and the compliance and regulatory costs in getting these plants cleared had a huge say in terms of P&L. The other element, as you rightfully pointed out, was also the pricing pressure that these companies faced, and these pricing pressures actually pulled down earnings estimates for a whole host of pharma companies, barring a few which had a few niche products that still had the pricing element in their stride. The third element obviously was, as these concerns started abating over the last 2 to 3 quarters with FDA issues getting resolved, you probably had a far more consistent specialty pipeline getting built by these pharma companies because of the elevated R&D expenditure that they had done over the last 2 to 3 years. And these drugs probably have the exclusivity and the pricing in their stride, which probably gives them the support from a margin perspective as well. So as these approvals will start coming through, I think the margin improvement and the margin profile for a whole host of companies should probably improve, because a whole host of tier 1, tier 2 companies have niche ANDAs which are lined up for approvals. The third stack obviously is the valuation, and a few companies obviously are valued on a richer scale when you're probably talking about FY20 estimates. But as you start rolling over to FY21 and the assumptions of few more drugs coming into the pipeline, I think the earnings look far more sanguine at that point of time. Yes, so it does make sense for some qualitative stocks within the top tier and the mid-tier universe to be held on in the pharma space.
Okay, just want to revisit some of the other names, and I want to see what Wipro is up to ahead of its numbers. About a 2.5% uptick there. There's also Mindtree, while the numbers were at best in line, but the stock has been holding up today. And then Federal Bank. This is very interesting, considering yesterday when the earnings came out, Federal Bank did not really have such a pleasant reaction. That stock was down 3%, but today you're seeing that move about 1.5% higher. The management in their interaction with us also clarified that the NPA cycle would come to an end soon, and thereby that case of high provisioning. Mayuresh, what is it that you're firstly making a trend of IT? Inline numbers coming in from TCS, inline from Infosys, Wipro, while it's expected to be, yet again a muted quarter, but I guess all the excitement around large cap and small cap IT continues to be with the buybacks, with the bonus issues, which I guess is the buzz for Wipro as well, which is why we're seeing this heightened move in the stock.
And that would be the case, Aisha, and a large element, if you probably speak in terms of how the currency has moved, I think that clearly has created pain points for the sector in terms of reported EBIT margins. To top that up again, I think they're traditionally weak quarters, so Q3 because of furloughs, Christmas holidays, Q4 in terms of how the discretionary spending patterns will pan out for the US markets, for the European markets, are going to be critical in terms of how the entire landscape will pan out. Now, when you're talking about a scenario on one hand where digital revenues are increasing every quarter around 30-35% for the top names, even for a few of the mid-cap players 30-35%, 50% in certain cases, I think that is an encouraging sign, because they are better margin profile segmental contributors from a digital perspective. Having said that, again, I think if there is an inherent and a perceived slowdown which is expected to take place over the next few quarters, what kind of an impact does that probably have in terms of their order books? The order books are pretty stacked up at this point of time. The TCV deals for top tier names, including Infosys, TCS, when you're probably talking about companies which reported numbers right now, NIT Technologies, Mindtree, I think there is reasonable amount of order intake that has happened, and they are sitting on reasonable order books, which means execution will happen over the next few quarters, and the margins should also hold up. Now, in such a scenario, when you're expecting a reasonable earnings growth taking place, are you probably valuing companies on a richer scale in terms of their price earnings multiples going forward? So I think the richly valued companies will probably stay stuck in a range. I think companies which are able to outperform in these markets in terms of delivery, in my opinion, and where the valuation is probably a little bit on the lower side, can probably outperform. So I think we need to take a stock specific approach within these markets, but I think specific names within the mid cap players and the large cap players should do well. So I think we continue holding on to stocks like a Nucleus Software in the mid cap universe, stocks like an Infosys within the large cap space.
Stay with us, Mayuresh. In fact, let's just focus in on some stock-specific news. In more than 3 months after dropping plans to sell its stake in PNB Housing Finance due to poor valuations, Punjab National Bank has now received the stake sale process thanks to renewed interest from leading private equity funds. Let's get in Ashwin Mohan, who joins in with the latest of what's going on. Ashwin, the deal had been scrapped earlier due to the subdued valuations. Who are now the suitors in round 2?
Right, so this deal had been scrapped earlier due to depressed valuations, but now we're given to understand from our sources that the entire deal process has been revived. The valuations of Punjab Housing Finance are marginally better than what they were when the deal was called off a few months back. Now what we're given to understand from our sources is that there are 4 leading private equity funds who are likely to participate in the final lap or the final leg of this particular stake sale process. Remember, Punjab National Bank holds about a 32.7% stake in Punjab Housing Finance, and that translates to a value of about more than 4,800 crore rupees. So it's clearly a big deal, and there's also a lot of pressure on Punjab National Bank because remember, the government has directed some of these state-owned banks with NPA problems to divest their non-core assets and improve the overall capital ratio. That's the main trigger or rationale behind this stake sale process. We are also given to understand from sources that the 4 leading private equity funds are Blackstone, Carlyle, US-based Warde Partners and General Atlantic. So these are the 4 suitors as of now, and they are likely to submit binding bids for a PNB stake in PNB Housing Finance within the next 2 weeks. Another factor to be kept in mind is that the stake on offer is about 32.7%. So since it falls in the promoter category, it may trigger an open offer, and one has to wait to see how that aspect of the deal is handled. In terms of official responses, Punjab National Bank has told ET now that they have revived the entire stake sale process, and they could look at either selling part or the entire stake, but they can't reveal the names of the prospective suitors due to confidentiality. All the other participants have declined to comment to ET Now's query. Back to you.
Okay, Ashwin, thanks much for those details. As we are winding down trade, let's also take it across to Jayesh, find out what the dealing room pulse is like. Jayesh?
Aisha, it's difficult to predict how the Nifty or the Bank Nifty will react next week because the dealers are, being a little cautious because past few days we have been in an extreme narrow range, and also that next week some big earnings are lined up. Dealers are recommending going light into the weekend, but plenty of stock-specific action. What they have in fact recommended to most of their clients is intergroup deviation as a positional sell. IGL that is on the verge of a technical breakout. In fact, it has bounced from its 200-day moving average, so some upside can be seen from IGL. And lastly, we have IRB Infra, where they are recommending that weakness is likely to persist and the stock could move down to the lower end of the channel that it has been trading in.
Okay, let's get right back to our discussion with Mayuresh. And Mayuresh, there's a whole host of important numbers due next week. I'm handpicking one, that's Maruti. By and large, we're expecting that the tepid volumes could translate into a flattish top-line growth as well, and there will be commodity cost pressures being felt. The management is looking at, new launches in order to try and rev things up. But going by the kind of December auto sales numbers, what are you penciling in for Maruti?
Yeah, well, again, I think going purely by numbers that have got reported over the past couple of months, I think the softness for the auto industry should continue. Again, I think Maruti, the reported numbers thereof, the softness that we've probably seen in volumes are going to have an impact in terms of the overall top line growth. So the December quarter is expected to be muted. To top that up, what you've probably seen in terms of input prices, the input prices have moved higher. They have taken selective price hikes, but what probably happens even in the December quarter is the liquidation in terms of the inventory for 2018. So again, the discounting factor remains extremely high in the month gone by. So yes, I think the margins on the EBITDA front should also be under some amount of pressure and softness. But I think it's the longer term outlook that one really needs to look at. The kind of launches, as you rightfully put through, I think is something that the street is keenly awaiting for. The response that it probably gets and the kind of market share that it probably has across its variants, I think does hold Maruti in a very commendable position at this point of time. The price hikes that they've probably taken, what kind of an impact does that have on volumes? And the management was very, very categorical historical that the volumes should probably normalize over the next few months. And as margins normalize as well, I think the leverage should get played out on the balance sheet, coupling that up with the kind of utilization one sees as his Gujarat plans and better fixed cost absorption on that front. So yes, I think there is obviously value over a longer period of time. From a short-term perspective, there might be pain, but again, I think that pain has got played out on the stock price in general in my opinion.
Right. Mayuresh, which way is Reliance headed? And, while there's no denying that the numbers were great and we chatted as well after the earnings yesterday, but would you say that there is significant upside still left in the stock after what a great last year and start of the year to now has been?
So obviously it's been one of the best performing stocks, Ayesha, over the last year. But again, as I mentioned yesterday as well, I think the landscape has to be pulled over the next 4 to 5 years for Reliance at this point of time. I think when you're probably talking about the two core businesses, refining and petchem at this point of time, there is obviously some amount of concerns relating to the terminal valuations for both these business segments. And I think the management is very, very clear in driving retail and digital services, which are going to be great value drivers. Now even in yesterday's numbers, the contribution is increasing at this point of time. The EBIT margin contribution both from retail and digital services is increasing as well. And with the increase that you're probably seeing both in terms of volumes and the expected numbers both on the top line and the EBIT front, I think that should play out very, very meaningfully. At the same time, I think their core capex in their core businesses of refining or petchem are behind them. There is stabilization that is expected. The IMO regulations that will come through are definitely going to abet the refining part of their business. Petchem obviously is a lot more dependent in terms of crude pricing and what probably happens in terms of downstream pricing as well. And there is a very whole host of complex products there. You've got paraxylene, you've got the PX products, the PTA products. So I think there might be some lumpiness in a quarter or two considering each of these individual business lines within the petchem part, but the overall numbers should hold up for Reliance. So yes, I think it's a larger canvas that I'm putting through the next 2 to 3 years. I still remain very, very constructive, which means very, very positive on the stock. And a clear disclaimer, I own this stock in my funds.
What's the take, Mayuresh, when it comes to L&T, all slated to deliver its numbers next week? Do you think that we could see strong growth within the infrastructure segment? We have seen large orders as well coming in. Would that help the overall order inflow?
So again, I think the kind of reported orders that L&T has put forth in the quarter gone by, the expectations of front-loading of orders expected to continue in this quarter as well, for obvious reasons because of general elections happening over the next few months and the expectations of new orders in the quarter to come. I think a large element in terms of the orders that they have probably received over the past few quarters, specifically on the infrastructure side, and the kind of execution that this company is probably doing. I think that is a direction that the company is ideally slated and that they're probably poised to go after. So again, I think in terms of their overall targets over the next 3 to 4 years of doubling of revenues, of taking EBITDA margins closer to 12 to 15%, the kind of revenue growth that one expects to get delivered on similar accounts, the expectations of working capital requirements coming to that 18-19% mark, and ROE expansion happening to 18% as well. So I think even if they're able to achieve a gradual improvement over the next year and a half, and the general macro situation in the country as we've seen it specifically from utilization levels and the execution for the company in general on the domestic front and even on the overseas operations, the fall in crude prices is something that one really needs to watch out for, specifically in terms of overseas execution and the receivables position thereof. I think the overall consolidated book when it comes to E&P, when it comes to infrastructure, hydrocarbons, I think it should hold up pretty well. So yes, I think it's a barometer to the Indian economy, and simply put, I think anybody who's holding on to the stock should continue holding.
Okay, continue to remain invested in L&T. Mayuresh, we'll let you go. Thanks much for joining in and have a good weekend. But let's get in some top trading calls from our technical guests as well. Dr. Narayan, what are some of your top closing calls? What is catching your eye?
Well, I think the market seems to be finishing off reasonably well. So some of the stocks which are revving up late in the day I think may have some spillover impact into tomorrow. So looking at some BTST type trades in ICICI Pru, currently 351 can go till about 361. So buy with a 5-6 rupee stop loss, and the other one would be HCL Tech, which is finishing near the top of the day's range at current around 966, 967. Buy again with a 10 rupee stop loss for a move to about 980.85.
Okay. Manas, what's on your radar as we wind down trade for the week?
Aisha, I think one can look at TCS because most of the IT stocks are looking strong on the charts, and we have seen a lot of buying interest in last 3 trading sessions in TCS. Today TCS has already broken its 20-day moving average. So I believe that the stock has potential to test its 100-day moving average now. So target would be around 1940 and the stop loss should be 1880. Second is the buy on Hindalco, because in last 2 trading sessions we saw some selling pressure in Hindalco, but the stock did not go below its previous swing high, and today we have seen a lot of buying interest at lower levels. So I believe that the stock has already made a bottom near to 204, 205, and the possibility is high that stock can give a breakout in a day or two. So here I think one can take a chance, take a long position here, keep the stop loss below 206, and here the target would be around 215.
Okay. Manav, what about your closing ideas?
So at the current levels, if you're looking, we have already seen a good movement come in specific stocks. Apollo Hospital looks good, in fact it has been forming a series of consecutive higher tops and bottoms, and today also it has witnessed a good breakout with above average volumes, and the oscillators are still showing some sort of a good momentum for this stock going forward. So a stop loss of 1360 on the lower side for an upside target of 1400.
Okay, that's the take coming in from our technical guests on their top calls. Let's get in Karunya then to wrap up what has been quite a week on the downside for the equity markets gone by, and talk about all of the important result reactions as well as how the day has really shaped up, given that we haven't really piggybacked on those positive global cues. 10,900 here to stay, but it's not with too much conviction. It's a minor gain of about 7 points, so it's a flat move, I think, which is how you can describe it on the index. But just want to take a moment as well to address some flashes on your screen. Sun Pharma to SEBI, they're going to the market regulator. They just pull up the stock price of Sun Pharma. They're saying they request SEBI to examine the matter in its entirety, request SEBI to examine the role of other media houses and other stakeholders. So I think what Sun Pharma is going ahead to say is that there is absolutely perhaps from their end no truth to the matter. It's only been cooked up. They're not privy to any 160-page letter in terms of a whistleblower, and now they even want the market regulator to intervene to find out what is the role of the media houses and stakeholders, and in order to delve further into investigating the matter. Remember, the stock price of Sun Pharma in the last 2 trading sessions has not been spared relentless selling pressure, and even though it's recovered from the low point of the trading day, it's going home with a massive gash, and that's a stock that is now quoting at 390 levels. That's the latest from Sun Pharma to SEBI. Examine the matter in its entirety. So we'll have to see now how this story shapes up. But let's talk about the story of the markets today, and 10,900 intact, but Karunya, quiet day.
Yes, it's been a quiet couple of sessions, Avan. Now, while we did start the week on a strong footing, for the last 3 sessions is something that we've been witnessing have been very sluggish with regards to the up move that we've seen, with the markets ending almost every day on a very flat note. Today also, while for most part of the day the Nifty was struggling in the red, struggling to reclaim the 10,900 mark, it has managed to do so in the last hour of the trading session. So Nifty at this point of time is perched at 10,910, higher by just about 5 odd points, but yes, an important psychological level that one needs to watch out for. With regard to what are the stocks that are fueling this up move, which are lending support to the markets, we've seen a fair amount of recovery come by in Sun Pharma about what you just flagged off with regard to what the management had to say about the whole governance issues which were raised
raised by a whistleblower complaint. Of course, Reliance was the cynosure of all eyes today. Look at how it has been moving up steadily throughout the day. That's leading the pack really when it comes to the benchmark Nifty 50 heavyweights. Wipro is another stock. It touched the day's highest point right ahead of its numbers. We're standing by. The numbers will be out in an hour or so. Kotak Mahindra Bank, good up move seen there as well, 1.6% higher. Adani Ports, Hindalco, HCL Tech. It's been a broad-based sort of an up move. If we look at the Nifty 50 index, it's not any particular pack or any particular sector. But if you have to talk about sectors, it's only the Nifty IT pack today, which is poised to end in the green. Rest of all the sectors completely in the red. The losses are being led massively, mainly by the pharma names. We're seeing a massive weakness and massive selling pressure come by in a stock like Sun Pharma, which is a big drag on the markets as well as the pharma index. There's also a Glenmark, a Cadila. Both of these stocks were downgraded by Citi in a note that released this morning. That's something that they've been reacting to all day. Apart from the pharma index, it's the realty names once again reeling under pressure. Godrej Properties is down nearly 3%. Oberoi Realty 2.5%. DLF is also lost more than 2% in today's trading session. Apart from that, the broader end of the markets is where a large part of weakness, a large part of the selling pressure is being witnessed. Pull up a Philips Carbon. Look at the kind of selling the counter has witnessed in today's trading day. It's down by about nearly 12%. Deepak Fertilizers is down 6%. Indian Bank, Syndicate Bank, a lot of these smaller PSU banks are pulling the markets lower as well. Apart from that, there's a Zydus Wellness, a Sri Renuka, Bombay Dyeing, and even stocks like Sun TV, Spark, IDBI Bank, Graphite India, Glenmark, Union Bank. So a lot of these pharma names and a lot of small and mid-cap PSU banks from the broader end of the markets are the ones which are ailing in today's trading session, apart from, of course, the broad-based weakness that we saw all day long.
Okay, Karan, now we'll leave it at that. It's been a simmered close so far, 10,936, negative breath, Reliance on one hand and Sun Pharma on the other. CK, any observations for next week?
Well, I think if you look at the trading pattern of the Nifty for a while, it's been stuck in this 11,750, 11,950 range now for 8 weeks. Today completes the 8th week in this range. Now that's pretty much, and therefore, and this is too narrow a range for the market to have traded for 8 successive weeks. So I think we are on the verge of a burst, either upward or downward. But if you were to look at the the heavyweights within the Nifty space, take Reliance, which was in fine form, Lever, which has been holding steady, you take ITC, you take the HDFC Twins, none of those stocks are showing any kind of weakness. So I would think the danger of a downside break from this range seems to be very limited. Even the Bank Nifty, the banks also contribute a significant amount to the Nifty itself. The Bank Nifty has actually been outperforming, although not by much in recent days, but still outperforming the Nifty in the way it has moved. So collectively, I think the chances in the coming week are much greater for an upside breakout beyond 10,950, and I think that is what we should be aiming for and playing for.
Right. Manav, your observations for next week? Any trades in particular that you'd be looking out for?
Specifically looking, I'll be looking very closely for the banking space. Most importantly, the bank index has managed to close above the crucial support of 27,200, and stocks like Axis Bank and ICICI Bank has managed to also close above its important weekly support levels. I sense that going forward, we will see this breakout happen on the upside eventually, and since the markets are also holding its important grounds, I think Axis Bank and ICICI Bank could be the stocks from the banking space, and will not be surprised to see Axis Bank to likely see an upside of at least 5 to 8% in a very short term frame.
Okay, CK as well as Manav, good to have you on the show and have a good weekend. We'll see you again with Train on Monday morning. Let's take a break, but with an aim to assist Indians to plan